Today, I have a very important update on my trading journey for you guys, so let's get right into it. It's official. I am out of eval jail. I did pass this 50K eval today, so now I am back to being funded on Top Step. And I know, not a very big accomplishment, but if you watch my other video that I made a week ago where I talk about the struggles that I've been facing in 2026 so far with trying to size up way too fast, all that stuff, it felt only right to pretty much have a fresh start on one firm and focus on that. So that's Top Step. So today we passed the combine that we had. I'll talk about the trade I took to do it, but like you can see, fresh 150K, or not 150K, 50K express funded account here. We passed in about a week. And then we have this trading combine that I also bought because to scale up responsibly, I'm now going to be copy trading this new 50K combine with the 50K express using proper sizing, right? Not being a degenerate. And I'm going to talk about kind of the sizing and plan I have for that as well shortly. So going into the day, we had this look on the NASDAQ, right? It was actually fairly bearish. Now, I wanted to see us tap into the daily bearish gap that was still open, right? We ended up tapping into it, but in pre-market, we had yet to tap into it. Now, if you look at what ES had done overnight, it was actually a very different story. So by the time market opened, ES had already tapped into its daily bearish gap right here, okay? So I was really watching out for that because to me, that was a good sign that we had basically a bearish SMT between ES and NQ. So if you kind of look, right, like this is the start of the daily bearish gap on ES. And by 9 a.m. or 9:30 a.m. when the market was opening, we had already actually tapped into this and we had an hourly bearish inversion. Okay. So I had all of the reason in the world to be bearish bias going into this morning. We also had left, if you look at the lower time frames, a pretty solid amount of trend line sell side liquidity. And we also just have these relative equal lows, these external ones that I was pretty interested in as well. And so looking at that, I was bearish going into the day, right? Like right off the rip. Now, I did end up taking a loss today. My first trade was a loss, and I'm going to talk about it right now. So we'll go back to NQ. So like I said, NQ had not tapped into this daily bearish gap, but since ES already had, I was just considering this a bearish SMT, which kind of increased my confidence. Plus, we were starting to invert these bullish gaps, right? I already talked about all of it, but it just looked extremely bearish going into the morning with all of this sell side below. And it did not end up playing out that way at all. So I'm just going to show you guys the first trade I took. If you go to the 1 minute chart right here, this is the first trade I took, okay? So basically, we were chopping a lot. We hadn't really taken any of the sell side that I was even targeting, so I felt fine still being short biased at this point. But we then get this manipulation leg up here into what was a 15-minute bearish gap, which we end up closing above it eventually, but at the time, we started to reject it, right? So if you look back at the 1 minute here, right, we're starting to reject this, and then we finally get a fair value gap to form on the lower time frame, because notice here we're just wicking around everywhere, not forming any imbalances. So we finally form an imbalance here, and I just take a short on the retest of that, okay? And we also have like pretty much equal lows down here, so I feel really good about at least being able to catch a 1-to-1 at this point, right? I ended up having a limit sell in here, so I got a fairly good entry. At least it looked like I did, right? So that was the first trade. It was about a 1.3 to the first target, but I was looking to really keep runners because I kind of assumed it was going to be a bearish trend day, the way that we looked with the SMT and the daily bearish gap, all that stuff. And for whatever reason, and I think it's just a loss, I would take this setup again. Now, this wasn't an inversion trade, really. This was just a 2022 model. But for whatever reason, we just end up blasting right back through this gap and disrespecting it. And at this point, instead of waiting for it to hit my swing high stop loss, I just manually stopped out here because that inversion pretty much told me that, okay, for whatever reason, it seems like the market wants to go up here. If we were truly bearish, would we have made that move? Probably not. We probably would have completely respected this 1 minute and headed lower, which we didn't. And so we end up absolutely ripping. And now for anyone asking why I didn't long here, I know a lot of people did. I just don't love this as a trade because first of all, the bearish bias here, in my opinion, was fine because of all the context on the higher time frame I've talked about. But here, not only does this kind of just go against my higher time frame narrative, but we're not really immediately delivering out of anything, right? This is just a chop range all right here. There's no, obvious fair value gap. Maybe if there had been like a 3 minute or 5 minute really obvious gap right here, I would have taken that long. But then again, I wouldn't have shorted here, right? And so just I expected maybe to be able to get a low resistance move through this level. We didn't. And like, obviously, yes, there are draws on liquidity above. There's all these swing highs, and there's the daily bearish gap, which at this point I have it marked here was unfilled. But once again, I was counting on the SMT where ES had already touched the gap to hold, and it just didn't. So we end up making a huge run up. We end up stalling out in this daily gap around this range. It's also a larger 4-hour gap, which I already showed you, but we'll just go back to it again to nail the point home. It's a very large 4-hour gap, okay? And we take out a high that existed already inside of it. And so with that in mind, I'm very much fine with taking another short, because even though the first trade was wrong and I lost a decent amount, I had the conviction to understand that there's probably good risk reward to maintain my short bias in this range. So what I ended up doing was shorting when we got this inversion right here. Okay. We actually got this inversion and I shorted it and I got break even. Okay. So if it'll load, I'll just delete this gray box. You guys get it. We're all of this is happening inside of a higher time frame bearish gap. So we get this inversion. I short it, end up breaking even a little bit later, right? Once we make that move back up there and we come back down to my entry, I say, all right, I'm going break even here. We get break even, not a good move. And then eventually we finally get like a better looking inversion right here around, what was this, like 12? So we get this better looking inversion around 12. Okay. And that's my entry. And instead of setting my stop at this swing high right here, which actually would have worked because I don't, we never actually hit it. But instead of that, I kept a much wider stop towards the higher area of this 4-hour gap. So let me just kind of help like illustrate what I'm talking about. So I entered here, right? We'll just go draw out the short position. And I was targeting the midpoint, right? The equilibrium of the morning pump. So if you look from here to here, and you draw the fib out, and I'm going to make a video about fibs soon from an educational concept. So right here was the trade, right? I was targeting the equilibrium of the morning pump, okay? And my break even was at this point right here, which was this low inside of a 5-minute. So I was targeting equilibrium of the morning pump. And if you look at the 4-hour, my stop, why is it so messed up? I don't know. Oh, it's because I'm just trying to help you guys visualize it. All right. So that was about my entry, right? And you can see that my exit was going to be, my stop was going to be all the way at the high of this bearish 4-hour gap, okay? I felt like that was fine. I sized lower to accommodate for this. And so we end up getting basically a 1.5 to 1. So like I said, I enter right here after this inversion, got a 1.5 to 1 because my stop loss is the high of the bearish gap. I'm targeting equilibrium, and we end up getting a pretty clean move down to it. Now, one of the best parts about this trade, in my opinion, was that I set this trade up, I sized smart, I calculated my risk, and I literally just went to the gym. I was not checking my phone at the gym. I got home, saw that we had dumped, saw that my TP had hit, saw that I had passed the combine, and that was kind of that. There wasn't much to it. I entered right here, understood my risk completely, and felt fine with it because I thought the higher time frame conditions were on my side with this, which they evidently were because it worked. And I did not sit through any of this chop, which it really chopped for like over an hour when you look at it. I mean, we did not have good movement. We end up almost taking out the previous high, but we don't actually take it out. And yeah, basically the whole move just took a while to develop. And even to the downside right here, like you can see, it was a pretty slow developing move. And it kind of finally started picking up some steam around 2 p.m. And that's when the final TP was able to hit. So pretty good trade. That's what helped me pass the 50K combine. And like I said, I ended up buying another combine after the pass because it's just going to be nice for me to be able to copy trade. So let's talk about like the significance of this now, because passing passing a 50K combine really isn't anything that special. Like, yeah, it's good. Like, especially if you do it in a calculated way and you're not being an idiot. But it's not like some insane achievement, right? It's not like I'm coming on here and saying I just took a $40,000 payout. But it's the significance of this for me that I think I can build off of. And the reason I say that is because I've obviously talked about how January and February were really bad. I was blowing a lot of evals, right? I was getting greedy. I was trying to FOMO. I was trying to pass them in 2 days flat, sharp. And it led to me failing a lot, right? Because I had like 3 bunches of 5 evals that I failed, and then I would pass some, I would get funded, and I blew some of those accounts pretty quickly because I would go into those new fundeds with the mindset of, okay, I need to take a payout quick so I can pay back the evals that I just burnt trying to get funded, right? And so basically, it took me making the video last week where I take ownership of how I've had a pretty bad year. I talk about, what I'm doing wrong, all this stuff. You guys might have watched it. If not, I talk a lot about psychology in there. Maybe check it out. But one of my conclusions that I came to after talking to some friends who are trading better than me, after just doing some self-searching, if that makes sense, the conclusion that I came to is that I need to start from scratch. Not start from scratch because I don't feel like the knowledge is good or that I need to change my system, but start from scratch on the way I'm approaching firms, because I showed myself that if I scale up responsibly and I just let the balances compound and snowball without being an idiot and trying to force it in one day, I showed myself this fall that I can take consistent payouts and get nice money. But whatever I was trying to do this winter of forcing it and, trying to go from $1,000 days to 10,000 in the blink of an eye, that's what really messed me up. And so hopefully, with only having one XFA and then slowly adding combines on top of it as I pass them, right, and trading smart, that's going to allow me to actually get the allocation and the momentum that I was looking for all along. Because I always am a believer in, like, if you try to force something before you're actually ready, it's going to fail you, right? And I've talked about it in many videos. I say one of my favorite analogies: if you pass Spanish 1 with an A and you think you're the shit, and then you try to go right into Spanish 5 or Spanish 4, it's not going to work. You're going to fail the class. You're going to get sent back down to either retake Spanish 1 or you're going to land in Spanish 2 where you belonged all the time. So I need to be more focused on how can I get $1,000 days to $1,200 days to $1,500 days, not how can I get $1,000 day up to 10,000, right? The 10,000 can come. There's no doubt about it. It can come, but it's not going to come in the blink of an eye from 1K to 10K because I'm trying to force it to look cool for YouTube, right? And that's the reality that I really just kind of hammered into my head. And so in a way, maybe this is like a punishment or a discipline thing or a willpower thing to like be okay with only trading 150K, because there were times where I was allocated with 3 to 5 of these accounts and pulling in, pretty good leverage. A winning day compounds fast when you have a lot of allocation. But I've proven to myself over the last few months that I'm trying to get too greedy too fast. And so the only way I see fit to solve that is to literally force myself to trade size that a beginner would trade, because that's what I need. I need a fresh start mentally, right? I know the technicals. I know my system. I'm good with intuition and reading bias and price action. But if my mentality, greed, and FOMO are going to get in the way of all of that, then it's almost like those things don't matter, right? The technical analysis, the knowledge of the markets, the discretion, none of it actually matters if you're going to let your mind, spiral and disrupt your winning system every time something doesn't go your way. So with that being said, on these new accounts, on this new account plus the combine, my goal is to risk like 500 per trade, maybe 400. My max loss limit is going to be at 700, so I would have to have 3 losing trades in a row to blow this. So I have confidence in myself. I have faith in myself. Ideally, the faster I can get past the 2K buffer, the better. And another way I'm kind of going to be approaching this to help expedite the process of scaling up without being dumb is that if I take a trade that wins and I see that there's another good setup potentially forming, I will stay on and try to take the second. Now, the reason why is because of the way prop firms inherently work with end of day drawdown. So say the max loss limit is 2K, right? For a 50K, and I make 500. right? Well, if it's 10 a.m. and I've made 500, then my effective max loss limit for the day is actually 2,500 because the max loss limit trails on an end of day basis. So intraday, I could make, say, 1,000. So I could be 1,000 in the green, and I would be able to lose that entire 1,000, and still my max loss limit on this account would not change. I'd just be break even on the day. So you have to be able to balance protecting your wins, but also being aggressive. And when something's working and when a day is giving you good price action, trying to like double down and either hold a trade longer or take a little more risk, right? So I kind of envision myself, if I have like a winning trade, going for maybe another trade if it looks good, right? Never force it. But if I see another trade that looks good, I wouldn't be opposed to like half risking. So say I make 500 on the first trade. Okay, well, to try to build my buffer up a bit more, because I can't really hurt myself unless I lose more than what I initially made, which I'll never let happen, then I'm fine risking 250 of that profit to try to go for like a 1-to-1 or a 2-to-1. And then look, I'm even closer to passing the buffer. So that's kind of my approach with these. But yeah, I wanted to update you guys on the trade. I think it was a pretty good trade. Like I said, the reasoning was there. The bearish bias held. And even though the first short did not work, we ended up pumping and expanding to the upside a lot. I was still very confident in our ability to sell off today, which is why I took a inversion during lunch session, which is not always the highest probability. But for me, at this moment, it felt like a really high probability trade, and it ended up playing out perfectly. So I appreciate you all for watching. I know I've been a little less active. I'm going to start ramping up the educational content. I'm going to start ramping up the live trading. The only reason I didn't record this trade was because I knew my plan was to enter and go to the gym because the stop was wide, all that stuff. And I just felt like with this trade, if I lose the account taking a trade like this, that's a result I can absolutely live with. And so, yeah, that's what happened. I appreciate you all for watching, though. Make sure to join my free Discord. It's linked in my YouTube bio, and it's linked in the description of this video. And yeah, I'll catch you guys in the next one. More educational content coming very soon. Peace.